You should be screaming that from the rooftops, my friend. We're actually going to be talking about the mortgage deals.
Deals that make us drink. Oh my gosh. We're going to have a lot of fun on this.
There's this persisting bullshit belief in the society that money somehow is evil.
Well, where do you think the money came from for your interest rate, my friend?
Wait, the money doesn't grow on trees?
That's what actually makes you just slowly die without you ever making a decision. And it sucks.
It literally is bullshit.
Because if you don't make the decision is going to be made for you.
The lower rate may be great, but the cost of the rate...
that can be really heavy.
Ding, 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 ding.
You are winning.
This, my friends, is absolutely golden. Hi, everybody. Welcome to another installment of the Ask Ella Show. And today I have an amazing local guest with me, Giancarlo Anduray, and he's a colleague. So he's also in the mortgage space. And we're actually going to be talking about the mortgage deals or the crazies that really make us want to drink. And while mortgage industry is rife with alcoholics, right?
Oh my gosh.
I've never been one much for drinking. But on a serious note, there are certain deals that, in fact, will drive you over the edge. And today, we're going to deep dive into those because, believe it or not, it's not Ripley's, but the shit really happened. And without much ado, Giancarlo, say a little bit about yourself, please.
Hey, so thank you so much for letting me be part of this. I'm super excited and it's phenomenal. My name is Giancarlo Anduray. I am a branch manager for PMR Mortgage. Okay, so I have a small team of loan officers with me and we talk strategy all the time. Been in the industry over 10 years now and it's a fantastic, phenomenal ride. The ups, the downs, the stress, the drinking, and everything in between.
Pretty much.
Yeah.
The highs, the lows.
The highs, the lows, and with me, I guess it's a little bit different because, I am an owner of a tax agency as well. So we have a lot of strategy that happens. And when we talk about deals that make us drink, oh my gosh, we're going to have a lot of fun on this. I'm going to tell you that.
10 years, that's a lot of people don't have the longevity to stay the course. So congratulations.
Yeah. Thank you. Appreciate it.
Totally. And that's just enough to see the good, the bad, and the ugly and the crazy.
It absolutely is. Yeah.
And some weeks in our business is like, is it the full moon? Is it Mercury in retrograde? Or is it all of the above?
My gosh. I really honestly, what the hardest thing about this is it's that lukewarm.
Yes.
Where you don't know if things are going to get good or things are just going to go south.
That's a scary space to be in.
And it's an extremely scary space to be in. And I got to tell you this, if you guys listening at this, if you are in that position thinking, well, I'm going to wait, I want to do it, but I don't really want to. That's that lukewarm space. That's what actually makes you just slowly die without you ever making a decision. And it sucks.
You said it.
It sucks to be in that position because if you don't make the decision is going to be made for you. And that's how life works.
Usually the market will make the decision for you, not us.
No.
Not the loan officer.
Nope.
The market.
All we do is just strategize. Well, I'm a big strategic guy,
Same.
right? So somebody comes in, the first thing is like, hey, what do you want to do? Where do you want to go? It's a big, themes of conversations with me. Not the typical loan officer is like, hey, you send me your information and I'm like, here you go, and stop the conversation.
Which makes us exactly the same because it's looking at the bigger picture. And that's actually the point that I keep driving home at people. And the worst convo a loan officer can have with a potential buyer is, what's your rate?
Yeah. Oh my God.
Kill me now, right?
I honestly think that this is the reason why you and I probably have so many of these deals that really want to make us go drink is because we're so strategic that sometimes, we give people the option and then they question everything along the way.
It becomes the paralysis by analysis.
Absolutely. So you kind of tell them, hey, you got to do A, B, C, and this is a time, right? You win first week, second week, third week, and then all of a sudden they're like, but why? And then now with the phenomenal introduction of ChatGPT, right? They'll send you a question and say, hey, well, this is what my ChatGPT is telling me. Yeah. I appreciate that. Thank you. I can do the same thing. It doesn't make a difference.
Exactly.
You're still going to have to follow the instructions I'm giving you.
As a matter of fact, let me tell you a true story. Speaking of things that make us drink in this business. So you work for PMR. I work for Fairway, and Fairway has partnered up with OpenAI. Yeah. So we actually have our internal version of ChatGPT that's on our servers. It's secure. And
That's so
it's our internal. It has no access to external sources, just the internal sources. So you would think that the information that it generates should be true and correct to the best of your knowledge and ability, right?
You should. Love
Operative word, and you got it.
Yeah, it should.
Guess what? I can tell you that almost every freaking time I ran a query through our company version of chat, looking for our guidelines, it still came up with stuff that ain't necessarily true.
Yeah, it's impressive.
True story.
So there was one that I did, okay? And I'm going to encourage you, like, just test this out, okay? Just test this out. So I went to ChatGPT and I said, hey, can a borrower pay their personal debts with concessions? Okay. ChatGPT made this whole entire story up.
How long was it?
Thing of how we were supposed to structure the mortgage to be able to do it. And in the end, it said, of course, yes, you can. Absolutely not.
Absolutely not.
It
the only loan that allows for personal debts to be paid off through concessions is VA.
It's VAs.
That's it.
That's it. But no, it said, you know what, FHA, and this is what you tell your underwriter, this is what you tell your loan officer and your assistant and the whole thing, right? And it's not true.
It is not.
So we have to be very careful about that, especially in the introduction, with so much technology. Yes, it does give you the answer you want it to give you. Mm-hmm. So it also depends on how you communicate with it. That's the other part of it, with these deals, right? Is that
technology is only as good as what you put into it.
The user.
The old adage from the early 2000s, remember?
Yeah.
Garbage in, garbage out.
I thought I was going to be like crap in, crap out.
It's GIGO, garbage in, garbage out. It still is true.
Absolutely.
It's all in how you ask and what you ask. So even, like I said, even on the internal version that's supposed to not stray from the internal sources, internal guides, the internet, etc., it still comes up with information that does not hold water.
Absolutely.
Time after time after time.
This is where experience truly matters. Okay, so somebody who's not scared of telling you, no, that's not the way it works. It's so much valuable than somebody who's got just a yes man. And this is not a knock against a lot of people in the industry.
No, but this is where actually, I also tell people it's like the AI cannot replace us.
No.
Because mortgage industry lending is not a black and white space.
Nope.
Maybe 20% of it is black and white that you can't really stray away from. But the rest of it, no matter how many people will read the guidelines, there's always room for interpretation.
Always.
Every underwriter, every company, every secondary manager, everybody is going to read the guidelines the way they want to.
Oh, yeah. Absolutely.
So there is no, it's really not black and white. 80% of it is not black and white. And 80% of humans don't fit into the black and white.
No.
So push button, get mortgage, hint, hint, hint.
Yep.
Great for AI, works for only a smidgen of the population. The rest of us come with real world problems.
Yep.
So AI can never really replace the expertise that we offer and the knowledge that we bring to the table.
Yep. So this is a part of that, and I know we'll talk about some deals, but I'll get in a little soapbox right now.
Please.
Right. So we talk a lot about equal housing opportunity, right? We talk a lot about everybody gets the same price. We talk a lot about compliance. But I want you to put something in perspective. If my situation warrants me going online and getting qualified for a mortgage right away because I don't have a complex situation, and that company is offering a lower price, should I get the same price if my situation is complex?
Technically, not in any other industry.
Right. However, what happens? Well, company A, because my situation is complex, won't approve me.
Right.
But I have to go to company B, right? And then company B doesn't have the same pricing because I'm not easy.
Right.
Is that a compliance issue?
That's a damn good question.
Isn't it?
Well, but then, let's flip the script and let's say, again, compliance and legitimacy and the whole question of steering, whether a realtor can't mandate that you work with a specific lender.
That's right.
Or steer you towards that specific lender. But then the big builders, you see where I'm going?
Yep.
They can steer you to either their in-house lender or their MSA, the market share agreement lender.
Absolutely.
And yet offer outrageous pricing.
Yeah.
And yet somehow that's okay.
That is totally okay, right? And the funny thing about
So
this
compliance?
Compliant. This is where I'm like, everybody wants to be compliant and nobody wants to be compliant.
Right?
Right? So it works only when it works for me.
Yep.
That's the part that sucks, So understanding also where a lot of these costs are coming from are tremendously important. I really wish that most people would understand that when you're going and buying a new build, you're the one paying for the interest rate buy down.
Can I jump across and just hug you right now?
Seriously.
Because I've been screaming that from the rooftops. Literally, my last probably 5 videos have been specifically on the subject of builder bullshit.
Absolutely.
I mean, it literally is bullshit.
Absolutely. So here's how it works, right? Okay. For you guys, let me just break it down to you.
Please do, because I'm not the only one saying this, so this helps.
No, I think it's important because we got to all share it because you have to be very self-aware. You have to be self-aware of what you're getting yourself into. This is what it looks like. Just going to use metaphoric numbers here. You go to a builder and they're offering you a 3.99% in today's market. Average rates today are going to say about 6.6. Okay.
Fair.
They're fair. That's where most of them are landing. Where do you think the builder gets the 3.99? Well, we all have the same rates available.
Right?
So what's the difference? Is that has to be bought down.
Exactly. And they're buying it down on the back end.
Absolutely.
Where you as a buyer don't see it.
Right.
So
and
guess what?
The question is, where does the money come from? Because that is what you should be asking yourself. Where does the money come from?
Wait, the money doesn't grow on trees?
It doesn't. Well, actually, the paper that it gets, we don't even have paper anymore. You know what I'm talking about?
Exactly.
So money doesn't grow on trees. So on average, right, if you're looking at a $500,000 property, you're going to buy it down to 3.99, and most of these are going to be FHAs because conventional, it's extremely expensive.
Yes.
So we'll do a traditional FHA. You're looking at $50,000, $60,000 of the purchase price that is being utilized towards closing costs and rate buy down. So that $500,000 house that you're buying, technically $50,000 of that is going towards your interest rate. Okay. If I am going to take $50,000 out of this thing, what corners do I have to cut? Because it's not like I'm actually doing something or building something that the market can absorb.
Right?
The money has to come in from whatever efficiencies, quote unquote, okay, the builder can actually obtain or put in place. But I will tell you this, I've talked to a lot of contractors. In the tax world, a lot of contractors. They get paid exactly the same.
Right.
But they're being pushed. So it doesn't matter if that rafter is perfectly put together. It doesn't matter, if they're putting, the foundation the right way, or if there's a crack, or if the nails go in sideways, or if they forget to, forget to do the stucco on one side or not perfect. It doesn't matter. They're going to get paid the same. House is done. They walk, and you, my friend, will not see any deficiencies on that house until something wrong happens. And then you want to go back to the builder and be like, well, you build a house, that has a bunch of problems. Well, where do you think the money came from for your interest rate, my friend?
Well, besides that, one of the interesting stats is that in the last 2 years, so 22 through 24, for Lennar, 27% of their buyers with FHA loans are underwater. Translation,
absolutely.
You pay $500 for the house. 2-3 years later, your house is not worth the $500 you paid for it.
Nope.
So now you're stuck. Yeah, you got that 399 rate.
Yep.
But now you're stuck with a house, and what the hell you're supposed to do if you have to move, or if you can no longer afford a payment, or something happened to you? What do? Short sale, foreclosure, what?
And let's talk
and that's just Lennar alone.
Yeah.
There's 24, I believe, percent for D.R. Horton. So, and that's just 2 out of the national top 2 builders.
Yeah, top 2 builders, right? And here's the other part to this, right? I'm going to add on to this because this is really going to make us drink. The moratorium for foreclosures and short sales was just recently lifted.
You were telling me that, and that's just scary.
Oh, that is extremely scary.
I mean, it was necessary.
Yeah.
And
these things
please,
can't go forever.
Please understand. Yes, correct. You can't continue pushing things back up the line.
Nope.
Because you're really propping up a hot air bag.
Yeah, that's what it is.
But in reality, not many people know that it ended.
No.
So now a lot of people are going to be in the world of herd. And the main ones in the world of herd are going to be the ones who bought new builds in the last couple of years.
There's a very large percentage of people that bought new builds because now they're coming. Remember the marry the house and date the rate thing. By the way, I was never a proponent of that. Like
I
don't
hate that
care.
phrase as far as I can throw it.
No, I don't care who was trying to sell you this, and like, oh, look, we're going to get this interest. I'm like, no, you're in a variable interest rate loan. And what happens is, you're speaking economics from people. Okay. I have a chance.
Wait, what? Because nobody gets taught economics anymore.
No, nobody gets taught economics, right?
That's another thing that makes me want to drink, because the majority of people don't know the very economic basics.
No,
we're not talking macro, micro. No. We're talking just
basic stuff.
Addition, subtraction, which is math,
right?
Actually,
and here's how it works, right? If I have a 3-2-1 buy down, like I was being sold, then that means the first year I got 3% interest less on my mortgage payment. Then the next year 2, then 1, and then it goes back up to what it is.
And what happens when the 3 years are up?
Right, then you go back to the normal interest rate. So you go back into the 7s.
Or 8s. Depends when you buy it.
Depending on where you started, right? Yeah. Because 3% under the normal rate. I mean, you were happy if you got a 4.5%, but that's 3% under. Wait, hold on a second. That means I'm almost in an 8. Yeah. So here's what happens with most people, most Americans. We live in a very big consumer
economy, society,
right? Society, yep. Whatever you want to call it, right? Capitalistic. The beautiful, the good, the bad, and the ugly is that when you give people the access to discretionary income, they're going to fill it with something. So that interest rate that you got at 3% the first year, it wasn't like you saved the money. No, you went and bought a car. And then you deserved, to buy yourself, the latest and greatest in technology for your house and TVs and et cetera, right? You name it, shoes, clothes, parties, vacations.
I mean, honestly, the more we make, the more we spend.
The more you make, the more we spend, right? But the problem is that basic economics tell you, well, my mortgage payment is going to go back up. And if I'm spending the money or getting into a long-term something right now, well, I'm not going to be able to sustain that payment. And that's what we're seeing now. Mm-hmm. Now people get a little bit into troubles and they're like, well, yeah, we can push, the envelope a little bit into this. And now we fall into this world of hurt. Those things really do make me drink because I feel bad for it. It's like, man, how can I help you out of this?
And the thing is that the worst thing is, and that's again what makes me want to drink, is that when people come to me with those new builds,
mm-hmm.
I would love to help you and refinance you and lower your rate. Because if you got it in the 8s and the 7s, yep. and the rates were recently in the low 6s, yes, we can help you, right?
Yep.
Except for the freaking value is not there.
No, it's not.
Because that 3-to-1 buy down, the money that went towards it, the subsidy, got shoved right back into that purchase price.
Mm-hmm.
And guess what? That home that you paid, again, $500 for, really realistically should have been worth about only $450.
Correct. At normal interest rates, and then you should have just taken the hit on the payment and
right.
kept your equity. The one of the very first things that I tell everybody looking at this, because they're always telling me, oh, why can't you give me a 3.99 or a 4.99 or whatever, you name it. Okay, you need to understand this. Your payment or the most important thing that you're going to be looking at when you purchase a property is the actual value of the property. It's actually the price of the property, mm-hmm. not the interest rate, not your mortgage payment, which, again, we can discuss a little bit more about it, but it's not. It's the value of the property. If you can buy that for lower,
ding, 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 ding,
you are winning. You're winning. There's so many tax strategies that we can put on the back end of this. Yeah, sure, your interest rate is high, especially if you're a business owner.
My God, take the highest interest rate you can because it's a tax deduction, for God's sakes.
Let's start with the itemization, okay? Let's start looking at, what's your healthcare costs? Where are your charity donations? What's your, personal expenses, on, a number of different things. How much in taxes? Are you buying anything personally that we can add on to it? Did you buy a car this year, okay? Brand new car in 2025, 2026, $10,000 of that interest is tax deduction that goes in as a personal. Did you have any tips or overtime? Let's come on and put a strategy that
mm-hmm.
way. Okay. And then you take the interest and you add it on to that, plus your annual taxes that you're paying on everything that you actually purchase. Because that's the other part too. People can deduct as an itemization all the tax that they pay on everything. The problem is that we don't keep documentation.
Right.
But if we do things right, take the highest interest rate, get all that, and then you have a tax deduction there. You're paying less in taxes doing that way. Now you buy a house, it's lower value, you have better, strategy for tax itemization. And that's just one part of the many things we can do.
It's like the tip of the iceberg, literally.
But this is intelligent wealth building.
Yep.
Okay. That's how they work. Something else really interesting, that I found out about taxes, and I know I'm kind of shifting off of this.
So, no, I love this because actually this has been a topic I want to talk about for a long time. Mm-hmm. So this is perfect.
So do you know how tax rates on properties used to come about and how they're still, kind of put together?
No.
Okay, so taxes on real estate usually came on the world of convenience. Okay, before houses were built, and where were bathrooms?
Interesting.
There were outhouses. There was no running water in the house. There really wasn't any electricity. The introduction of these services and now the convenience of having that in your house, well, that covered whatever the cities used to need to put, all the utilities and everything in your properties. The more bathrooms you had, the higher your tax rate. And it's still done today.
I'll be damned.
How many bathrooms do most of these $1 million homes have?
A lot.
Why? Because I have a higher tax rate and my taxes are tax deductible.
Damn. Okay. Is that on the national level?
That's
or
on
is
the
that
national
on
level? That's federal. That's federal. You see these people buying, mansions, with 16
No,
bathrooms.
the tax deductibility, I get
Yeah,
it.
absolutely. Yeah.
Huh.
That's just how it is. It's just how tax rates are. Now, every county, every city, has a little bit of a tax, variance on that stuff, but that's generally how taxes come put together. That's what assessed values were.
I was speechless.
And that's interesting. That answers the question of, well, these millionaires are buying multi-million-dollar houses that have 4 bedrooms and 16 bathrooms. That's the most stupid thing ever. Yeah, until you understand that it's a wealth thing.
That is so freaking cool.
Isn't it crazy?
That is entirely crazy.
The more you know.
The more you know. Sometimes, do I want to know, or is it going to make me want to drink?
Right. Exactly. Right. And now there's other things, that add to the value of a property, right?
Oh, yeah.
And taxes, right? If you've remodeled your property, if you had a pool, right? And stuff like that, but that all has to do with the way that things were used to be. It's like Social Security, and we can go down the rabbit hole of Social Security and everything.
That's like a whole other topic that we can bitch and moan about.
Absolutely. But as you can see, right, I think that you and I, we hold a very interesting different position, right? Because when I sit down and I talk to a client, if your first question to me, and I'm being honest with you, if your first question to me is, hey, what's your interest rate? I'm going to be like, hey, what's your tax rate?
Love that. my response to that usually is, how much are you willing to pay for the rate?
Yeah. Well,
because
that too. You can get whatever you want.
Honestly, you can get whatever rate you want.
Yeah.
So
absolutely.
Let's talk about the rate and whether it actually pans out.
Yeah. So that's been a very big theme of conversation, with clients on that, and kind of making them understand that there's more to this than just an interest rate.
There is a lot more to it. And circling back to what you said in the beginning, there's plenty of LOs who will take your info, stamp that pre-approval, shove you out the door, go shop for a home, honey. And you go shop for a home and you come back and contract in the hand and you're so happy and proud and whatever else. And then they tell you how much you're going to be paying a month and you're like, oh shit, I can't do this.
Yeah. So let's talk about some of the crazy deals that we've had recently, because I think this is going to be fun. Okay. And we have a plethora of these things, So I guess, if you guys are finding yourself in one of these situations or thinking about it, well, I think you're going to discover that there's a lot of stuff, behind the scenes that we do that most people don't even know.
Most people, and that's part of the reason why I'm doing this actually, is having those conversations, because most people don't realize how absolutely insane the stuff behind the curtain gets.
Yes.
And we're pulling back that curtain.
And how money works.
Yep.
Let's talk about basic economics. I knew we were talking about taxes and all that, but let's talk about the basic economics of a loan and how it goes put together. A bank, when they're giving you the money for you to purchase a property and you have a promise to pay it back in 30 years, they are assuming risk.
Lots of it.
Lots of risk. Getting $500,000 and waiting for you to get paid. I mean, think about it. Just metaphorically. Why don't you think about it? You have a $500,000 loan, $500,000 in your bank. Somebody comes up to you and says, hey, can I borrow the money? I'm going to take 30 years to pay it, but I'm going to give you interest. Were you just going to be like, oh, okay, here you go. Here's the money. Farewell. No. What are you going to ask? You're going to ask basic things that we, honestly have ever been taught, right? Is like, okay, what's your credit score? Who's buying? What are you buying it for? Are you putting down payment? Do you have any skin in the game?
How much is the property worth?
What is the property worth?
Is it worth that $500,000?
Right. What's your legal residency? Are you married? Are you not married? How much debts do you have? Like, you see, kind of makes a little bit of sense when you're dealing with your own money. But because it's not your own money, then everybody's like, well, you should give it to me, right? Or you should give it to them. I'm like, no, that's not how it works.
No.
We need to assess those. So now, with that in mind, I want you guys to have like that framework in when we talk about these deals that make us drink. So here's the first one. So recently we've started to see AUS changes. Okay, so AUS is automatic underwriting system.
All lenders use it.
Every single lender.
You can't really do a conventional loan without writing it through AUS. Nope. And that's your best bet of buying a house is conventional, again, going through AUS. I'm clarifying here.
Yep.
Same for VA, same for USDA, same for FHA. And if the AUS flips you a birdie, especially unconventional, the so-called manual underwriting where a human has to look at your file versus the automation makes your approval chances diminish exponentially.
Yep. So check this out. I have a non-permanent resident. Okay, they're on a work permit. Okay, legal, no problem. 720 credit score.
Okay.
Him and his wife looking at buying a $400,000 home, putting 5% down.
Okay.
No AUS approval. None. You're like, wait, hold on a second. That's a perfect thing. I'm like, yeah, they've been, 2-year history, housing, no problem. We had to run that and get so minute. The only way I was able to get it approved was at 10% down with both of them at a 25-year mortgage. Only way they got an AUS approval. So this is, again, we were talking about experience, right? But the credit history was such a big impact to this.
It was thin.
That was it.
It was thin. Wasn't it?
Thin. And
I'm seeing this a lot where you may have a score.
Credit score no longer gives you I got a great credit score, I can get a loan. No, it doesn't work that way. I've been
saying that to people for ages, though, that, my favorite, in air quotes, of course, lots of sarcasm.
Mm-hmm.
I have great credit. I should be able to get a loan.
No.
Nope.
That credit score dictates, the eligibility.
Maybe.
And yeah, so
maybe.
The eligibility to something, right? It's just like, hey, do I have a credit score? Well, yeah, here's your guidelines. If you have a credit score, yeah, you are eligible for that. Well, you get approved, that's totally different, right?
Exactly.
Eligibility and
or just because the guidelines say, for example, speaking of credit scores, that conventional will go down to 620. Or, in case of, as of late, that the credit score floor has been taken out, it doesn't mean that the loan is going to get approved.
Absolutely. It doesn't have anything to do with that. So I was baffled by this. I could not figure out what it was. I mean, we had trade lines and then we also had installment loans. But the installment loan was less than 12 months and the installment debts were less than 24 months, which normally you're like, why? Well, this is not a big deal, right? The borrower has had, at least 2 years, of history per se, right? They have good income. My DTIs, by the way, they're like at 35%.
Which is where you really start scratching your head.
Yeah. So it's not
reaching for a glass.
No, it's not what we were really trying to push this, to go to the max. No, we were just trying to get a basic approval.
Right.
And then you have to go like, okay, well, the client wants to buy a $500,000 house. Okay, well, not approval. All right, let's lower down the purchase price. A little bit. I'm at 250 and I still can't get an approval. And I'm like, this is insane.
I've seen that lately a couple of times. And actually, even with FHA.
Yeah.
Which the everything has been tweaked so bad that it's, the screws have been turned that, lower the price, lower the debt to income ratio, tweak this, tweak that, and still get a flipping bird, as I refer to. You still do. So yes, you have to change it to 25 years. And then what do you do?
Yeah, so you start off with 25 years, and if not, then you increase the loan amount or you increase the down payment, and then you have to
increase the reserves.
Increase reserves, right? Let's see, hey, does AUS like them having a little bit of more money, right? And then we have to create the strategy behind it. There is so much work to be done. I'm exhausted by the end of the day. I mean, I'm telling you the truth. It's like, I look at this and I'm like, before I used to be able to look at it and just know right away, yep, it's going to work. It's not going to work. And now it's like, I don't know if it's going to work. I have to go back in and tweak every single little thing, and it's impressive. I mean, I've had, my loan officers that come up and they ask the same thing. It's like, hey, I'm trying to figure this out and it won't work. Okay. I have one that, income is a whole nother thing, but same thing, run AUS on a DPA, okay, a down payment assistance program.
Oh my God.
Okay. Here's what happened with this one. We have an accept on LP. All right. And then she tweaked a couple of numbers, to fit, the property that the borrower was looking for.
And the accept went away?
Went away. And we cannot get another approval. It didn't matter what we put. We increased our reserves back again. We went back to the original stuff. It didn't like it. We tried 4 different down payment assistance programs. It doesn't like it. I'm like, what in the world is going on? And it's just getting so stressful.
And that's what most people don't understand. That's another reason where we're like exasperated. And the amount of, I keep telling people, in the past, I could get a pre-approval out in less than an hour.
Yeah.
Now it may take me a whole day.
Yes.
And it's not because I've gotten stupid overnight.
No.
Or all of a sudden forgot everything I know. It's because all of the tech behind it.
Oh my gosh.
Has gotten so difficult.
Yes.
And the guidelines have gotten so picky.
And this is the other part too. I don't think that most people understand that you're thinking that it's a computer system, right? And then it's got the set of instructions. Well, you know how difficult it is for us when we get used to a set of instructions and then they change them. They don't really tell you.
I was just going to say, unbeknownst to us.
They don't really tell you.
No.
It's just got like, surprise, happy birthday. And I'm like,
except for not.
Except, you're not. So that has lately just driving me crazy. And you know who I feel for? I'll be very honest with you. All of you brokers. I truly feel for you. Okay? I truly feel for you. Look, you guys have to pay for all this stuff out of pocket. Okay? You have to run your AUS and everything else, and then you have to figure it out. Look, the other crazy one, I had an agent reach out to me and say, hey, this other lender, we got under contract and we can't get it approved. I'm like, okay, what the heck? Same situation. Okay, 700 credit score, conventional. They were using a down payment assistance program, right? Because the borrower didn't want to use his own down payment, which is really interesting. They had the down payment, but they didn't want to use it. Talk about strategy. I'm like, it doesn't. Anyways, it didn't occur to me, but he's like, oh, you know what he told me? He's like, I can invest the money somewhere else and make more money out of it. And I'm like,
no, you can't.
Fair enough. I'm like, whatever you are telling yourself, that's good, right? Whatever.
But come on, the reality is that not really, because when you're using DPA, you're screwing yourself over.
Yes.
I mean, if you're using a down payment assist because you don't have the money, you can't get the down payment from your savings, your checking, your 401, your IRA, your family.
Yeah.
A sale of something, like selling a car or something you own that you can actually generate money off of.
Do you want to hear a little cool tax law?
Hold, please. If you're exhausted everything on trying to come up with your own down payment, then by all means, yes, use the down payment assist.
Absolutely.
But with a full understanding what it's going to cost you. Because the down payment assist, that money ain't free.
Absolutely.
Little secret, big secret, not free. You're paying a higher interest rate for the mortgage. You're paying a high interest rate for that down payment assistance chunk, which is also a mortgage, a second mortgage, and you're paying higher closing costs. So it gets you 3 different ways, not 1, 3 ways. So why the hell, if you have the money, would you not? Anyway.
Yeah, I'm on board with you. I tell this to people.
Sorry, soapbox.
No, but it's the truth though. People need to understand there's different down payment assistance programs, right? There's a grant, there's a forgivable grant, and then there's
but only a smidge of people qualify for the grant.
Yeah,
or for the forgivable, for that matter.
Absolutely, and the
forgivable makes the rate on the first so much higher.
Yep.
So they end up you pay for that down payment assistance.
So here's an easy way.
One way or another, it's not free.
Easy way to think about it, right? Let's say that you walk into a bank and say, hey, can I borrow $20,000 from you to buy a house? Today's interest rate on that loan is going to be about maybe 10 to 12%, depending on your credit score. Okay. It's a personal loan. They'll give it to you. Here you go. Here's your payment, right? So let's say 20 grand, you're looking at $500 a month and you're going to have to repay that in 5 years. So those are going to be your true numbers. Now, let's just metaphorically. Hey, Mr. Loan Officer, we have 20 grand that we want to buy a house. Okay, perfect. You have already a $500 payment on this 20 grand, right? Okay, so here's my 20. I want to go buy a house. You're going to get whatever market rate today is. But then let's say that your mortgage payment is 2 grand plus the 500. You're at $2,500.
Yep.
Simple. Like you're not going to get away from it one way or the other. You need the money for you to purchase it. It depends on where you put it and how you actually structure this. That's how down payment assistance works. Simple. Very, very easy. So next time you think about, I'm going to go get this grant or I'm going to go get this free money, be careful, because especially if you're buying FHA, you are negative equity the moment you move into your house. Please understand this.
Thank you so much for saying it. Thank you.
Really want people to know you will have negative equity on your property when you buy it. Here's how it looks like. Let me go buy a car. Okay, I'm going to go buy a car for 50 grand. I'm not going to put any money down. So when I drive it off the lot, I'm going to owe like say $52,000. But the car's not worth that anymore.
Right. It loses 25%.
It loses 25%,
once
but
you
I
drive
still
it
owe
off the lot.
$52,000. Now, thankfully in real estate, right, the moment you close, it doesn't go down.
Right.
The hopes is for it to go up, but now you're paying catch up. So you have to wait longer for you to be able to recoup that money. And that's exactly the reason why we're seeing so many short sales and foreclosure for FHA and down payment.
But then again, with FHA down payment, like I said, if you've exhausted all of the opportunities and you have the means to repay,
Absolutely.
Not a bad way to go, because you're better off buying today, letting that house ride and appreciate. So you're still better off than waiting until you actually assemble the down payment.
Absolutely.
Because the home will appreciate enough to where your down payment is not catching up with the value of the homes.
Absolutely. Strategic.
So it is very strategic, but it's not good in every single instance.
Yeah. So if you're chasing free money, that's not your thing. If you can't do it, it is strategically a phenomenal thing for you to do.
Yep.
Now, I was going to tell you about tax law, right? With
Yes,
down
please.
payment. Okay. So here's a little trick. The IRS has a one-time in a lifetime ability for you to take $10,000 out of your retirement account without any penalties.
For a first-time home
For a
purchase.
first-time purchase. Okay. If you have it, you can do it. And then your spouse can also do it.
That is amazing. And that tip alone is worth its weight in gold.
That's it. So you can, all I have to do is just give your what's it called, documentation to the provider, right? And every provider has, different rules
Plan
on that.
administrator, whatever, yes.
But there is no tax penalty. It's not counted as income. You don't have to worry about, any of that, and off to the races. So you can take $10,000 out of your bank account, out of your 401k without it being penalized.
You still have to pay taxes, or no?
No, because you're transferring the wealth into the house.
Damn. That.
Yeah. So it's not technically considered income. There's no penalty.
You should be screaming that from the rooftops, my friend.
Yeah. So here's the other thing. How many people that we know that are actually contributing to their 401k? Because that's the other part. We need more people to be contributing to this for future savings.
Speaking of 401ks and speaking of crazy situations and things that would want to make you drink.
Mm-hmm.
In this case, it's not my client that makes me want to drink. It's the original loan officer that she was talking to before she came to me.
Ooh, I love those.
Right?
Yep.
So this lady gets referred to me because she needs basically no money down, and credit is good, income is great, but she needs no money down.
Mm-hmm.
We spend about 15 minutes on the phone. We start talking about one of her questions is about this assumable thing, which I'll go back to in a minute because that's a whole other pet peeve and a craziness. But as we're talking, she's asking me about the down payment assist, and I just explained the entire thing that we were talking about here. And she understands, and the light bulb goes off, and she's like, so if I ask my family for a gift, then I get a lower interest rate. Like, yes, nailed it.
Yep.
But she goes, well, what if I get a loan? Or what if I do this, I do that? And then it hits me. We haven't talked about the assets.
Yeah.
So one question changes everything. Do you have a 401k?
Yep.
Yes. And it turns out the husband has the 401k too.
There you go.
And the other loan officer never asked her about her assets.
Mm-hmm.
Ever. I'm like, lady, how much do you have in the 401k? And she says upwards of 100k.
You can take out, you can borrow, you can do a simple
I thought
exception.
I was going to fall out of my chair, hit my head, get hurt, or hurt somebody remotely. Because, again, this is not, I'm not a financial planner, disclaimer.
Yep.
But knowledge-wise, technically, you can take out up to 50% off your 401k, not take out, borrow. I'm sorry. You can borrow up to 50% off your 401k's vested balance, or 50k, whichever is less.
Yep.
The majority of plans will basically state that in the plan descriptions. Ask the plan administrator. But hello, this is the non-taxable event. You're borrowing from yourself. You're repaying yourself.
Absolutely.
And we just solved the problem with a down payment.
Mm-hmm.
Where basically the money is technically intact because you're borrowing from yourself.
And there's a lot of strategy that goes into that.
But what drove me crazy is that the other LO would respond to her questions via text, short quips, yes or no, and didn't bother to ask her about the other down payment sources.
Yeah, but I had a great interest rate. Truthfully,
but that's insane to me.
Absolutely.
That other so-called professionals will actually never figure out the best scenario for their client. How the hell does that add up?
You know, one of the things that
Commission
I coach. Yeah, so one of the things that I coach my loan officers on is how to talk money. So
I bow down.
Most people don't know how to talk money. Most realtors don't know how to talk money. Most loan officers, they if it's not free, it makes them uncomfortable. And it's like, why? There's always a cost to money. We are dealing with money. You got to be able to talk to somebody.
Can you spell stupid?
It's a lot of, it's a lot of lack of knowledge as well, right? And a lot of internal, because I really do believe that most people, they externalize their relationship with money.
I do agree with that wholeheartedly, because there's this persisting bullshit belief in the society that money somehow is evil.
Yeah.
Money does not have an emotion.
No.
Money is not good. It's not evil. It's how you use that money.
Absolutely.
It's your intent. Money doesn't have intent.
Nope.
Money has intrinsic value.
That's all it is. It's just transaction. It's transactional. It's
fiat currency. That's all it is.
It's giving you the opportunity to make decisions. And so things like that, right? When I sit down and I talk to somebody, I'm like, hey, so how much money do you have saved up that you'd like to use for the down payment for your transaction? Oh, well, but how much money are you asking for? And I have to be very serious with them and tell them, I'm not asking you for anything.
Right.
How much money do you want to invest in what you're purchasing? Because
it's not me asking.
This is a transfer of wealth. Think about this. All I'm doing is taking money that I have in this spot right here, and I'm putting it over here.
Like I said, I'm not asking, or you, for anything.
No.
It's what scenario, which set of numbers works best for you personally and for your financial circumstance right now.
Absolutely.
That's it.
That's all it is.
No more, no less. Math is mathing or math doesn't math. End of story, no emotion.
So when you're sitting down and you're talking to somebody about, hey, do you want a down payment assistance program, or what are you looking for? The other part is that people don't understand it. This really does make me want to drink. It's like, you live in an apartment, okay? And this is no knock to anybody, because this is my story, okay? This is my story. I lived in an apartment, we were paying $900, way back in 2007, 2006, right? When I go buy a house, the goal that I told the loan officer was, hey, I want to have the same payment. Okay, let's think about this. If I want the same payment, am I buying the same thing? The answer is no. How in the world am I asking for the same mortgage payment or the same rental payment if I'm not buying the same thing?
Love that spin. And this actually, we started with ChatGPT, right? This is actually where I think a lot of people would find the right use for ChatGPT.
Oh my God.
Or Claude.
Yeah.
Or anything.
Please do.
Please, for God's sakes, ask the AI if you want a payment of X per month.
Yes.
How much of a house does that get you? And then please go online and see what that price point results in, because that's the only way I can
reverse engineer it. Yeah.
That's it.
You know what I've asked, what I started asking my clients lately is, how much of a loan do you want? How much money do you want to borrow? That flips everything in itself. Because people normally come up to us and they say, hey, I want to buy a house for $350,000 and I want this payment. Okay, but they never really think about how much money they're actually borrowing. They're just thinking about the house and my payment. Well, when you introduce that question of how much money do you want to borrow? Yeah, that puts its things in itself, right? Because you got to actually give me a number. And if you say, oh, I just want to get $250,000. I'm like, okay, fantastic. Yeah, you want $250,000. And how much do you want to buy? Oh, if you want to buy $400,000, great. Are you putting $150,000 down? Oops. No, I'm not doing that. I'm like, okay, so then you got to give me some direction here. What are you comfortable with?
Right. The conversation, conversely, that I have with clients is about the payment. Yes.
Yeah, absolutely.
What are you comfortable paying? what would you like to pay, with the realization that your comfort level and the market may dictate different numbers.
Yeah, absolutely.
Are we still talking about buying, or is that something you have to rethink?
Yeah. And it's all about planning, right? I do a lot of strategic stuff too.
Same, because, if they want a payment of $1,500 a month, but you can't really buy anything for $1,500 a month.
Right.
But they could afford actually to make $2,000 a month, not saying that necessarily it will work. Wanting $1,500, but being able to pay $2,000 and being able to buy, are they willing to bite the gap?
Oh my gosh, Ella, you have no idea. I have a situation like this right now.
I'm not laughing at you because this is a recurring convo at least 3 times a week.
2023. Okay. Couple came up to me and said, "Hey, we want to buy this property. We want to buy it, from my mom." I'm like, "Fantastic. Okay. Let's get to working," right? Husband, wife, both working, no problem. They qualify. Hey guys, mortgage payment is going to be, like about maybe $1,900. Okay. Rates were starting to climb,
but not as bad as they were.
Not as bad as they were, right? Property was valued a little bit higher. Okay. So $1,900 a month. Well, fast forward to today. Same mortgage payment, lower purchase price, higher interest rate. And I remember telling him, I'm like, your situation is starting to change because I've been following up with you for 3 years. In those 3 years, you went from working full time to switching a job to getting commission. Now you went back to full time and now you decided to open up a business. I'm like, you do understand that the longer that you wait and the more of these changes that you do, the more complex your situation is going to be. And they're like, well, I just want a $1,700 a month mortgage payment. And I'm like, fair enough. Here's what it looks like. You have to come up, with $40,000 in order for you to get that $1,700 a month. So you have the choice of either putting the money down, buying down the rate, or buying something less expensive. Oh, but we're going to do this, with mom. And I'm like, this is the best opportunity for you. I was an hour with them, giving them a bunch of different scenarios. And in our world, this is where strategic works, right? And I'm sure that you've done this. You'll get into a situation and you're like, okay, so if we put 5% down, and then we do a split mortgage insurance, right? And then, okay, but that didn't work. Okay, so how about if we lower down the interest rate? Let's do a single premium mortgage insurance, but let's, put a little bit more money down. Let's see if that works. Okay, that didn't really work. Okay, so let's put more money down. Let's go single premium mortgage, regular mortgage insurance. And then, we raise down the rate, so we can lower down the points, and see how much cash to close. And just, listen, an hour doing this stuff with them. An hour, okay?
That's it? Only an hour?
And it's, I mean,
I'm being
3 years.
I'm sorry.
3 years. Yeah, this is why I'm making me drink, right? 3 years of doing this, okay? And they're still scared. I finally had to tell them, I'm like, guys, your fear is not going to go away. You're going to be scared today or you're going to be scared tomorrow. Like if rates start going down and then properties go up, what do you think you're going to be scared of? Oh my God, the market is going to go down because these prices are getting too high. Yes. And if you buy right now, oh my gosh, rates are too high. And I'm like, so there's always some fear. Always going to be some fear. I mean, do you remember buying your last house?
Last month.
Yeah, going through the mortgage process and you kind of having this little uncertainty in yourself a little bit. Yeah, that little nervousness.
I just closed in a new house last month.
Yeah, it's there.
Yeah.
It's there for us every single time.
We're human too.
Absolutely.
We go through this.
So I'm saying this, with me mentioning that, we all go through it. It's always the same fear. Okay. Even though we do these transactions on a regular basis, if I decide to buy another house, I'm still going to be scared.
Yep.
You felt it. So it's not
every freaking time.
It's not like I'm disconnected, but I'm very, very truthful when I tell you this. This is when you go to somebody strategic. This is when you go to somebody who's going to lead you through being able to develop wealth.
Yep.
Not just somebody who's going to be like, okay, here's your interest rate and walk away. Because what happens next, reality sets in. And then you reach out and you're like, hey, well, I need help with this. Well, no, they're not there because they didn't do their economics right, and they're not in the business long enough and they're out. So that's my little soapbox, with this, but it drives me crazy,
there are so many things that drive us absolutely batty. One of my pet peeves is switching gears entirely, is the commission breath real estate agents on the
Oh,
other
Lord.
side.
Look, I love my real estate industry. Okay. And I had a
I'm
meeting
not
today.
knocking every single realtor.
No, absolutely not.
But, and I get it. I've been through the good, the bad, and the ugly of this crazy business. I've been in it since 96. So I've seen a few shit cycles.
Yeah.
The Spittle fiasco in the 90s, the dot-com bust, '07, you name it.
So you have a whole lot more tenure than I do on this, so, I mean, I love
30
learning.
freaking years.
Yeah.
Sorry.
Just a little bit, just a little bit, so I'm glad to be in the industry, what it is. And oh my gosh.
That's why I'm like giving you kudos for being 10 years.
The
because
burnout is real.
The burnout is real. The attrition rate is real. Not that many people stick around for 10 years or more.
No.
So, it's like, give yourself a pat on the back and,
and hang in there.
And hang in there, it's hang in there, a little tomato is going to get better.
Yeah. And always try to learn, one of the things that I do is to always try to learn something new and understand what the market is doing. Right.
And the market is never static.
No, it's never. It's always like doing this like daily.
It's literally, yes. But like I said, I'm not knocking the real estate people, not all of them. Like I said, I've been through where, I direly needed that commission too, except for I would never make it that apparent to everybody around me.
Yeah.
I had a little more pride than that. But this is one of the latest crazies, literally just a couple of months ago. The buyer is one of my favorite clients. I've done umpteen loans for him, both on the residential and commercial side. Nicest dude ever. Super kind, super calm, super collected. Great businessman. He found this property for a second home at the Oregon coast. Yeah, we had a pre-approval. 10% down, second home. Wonderful. Perfect. Except for the property was a manufactured home, which I didn't know going in.
Yeah.
And one of the beauties of that manufactured home, and I mean beauties, not actually detractors, was that it already had the short-term rental approval from the municipality on it.
Okay.
Which made it attractive to my guy because as a second home, you can actually Airbnb it for, some of the year.
Yes.
And how some of the year is a whole other conversation that we can get into in a separate video.
Yep. We can go into each one of these things. But
here was the kicker. It was a manufactured home.
Yep.
And with that, my 10% down payment.
No longer.
And my client, being the sweetheart that he is, he was okay with going 15% down, which we could potentially make work. But this is where I sound like a late night commercial, but wait, there is more.
But wait, there's more.
That more turned out to be...
mortgage insurance must have been nasty on that.
Oh, it was.
Ugh.
What was nastier? Coast. Flood zone.
Homeowners insurance. Oh, on a manufacturer's. Oh, Lord. Oh.
Talk about a deal that will make you go freaking drink.
How many
the flood
insurance companies did you go through to get this flood insurance? Because that is
okay. Full disclosure: my daughter works for Goosehead. She is an insurance broker.
So she went through that.
She went through that, not me. And with not to mention the homeowner's insurance wasn't all that cheap because it's a
It's a manufacturer, yeah.
At the coast, the flood insurance was more expensive than the home insurance.
Usually, yep.
And at the end of the day, it tripped up the ratios.
Yeah.
And our approval no longer stood.
Yeah.
And I tried to communicate that to the listing agent.
Yeah.
Who was at that point bombarding me with literally daily, are we there yet?
Yeah.
We're about 2 weeks in and she's raising hell wanting to know status. And that what pissed me off and that what usually spells commission breath to me. Because, lady.
You don't know what you're selling, homegirl.
You have no idea what you're selling.
Oh, Lord.
Not only that, you're nasty AF.
Oh, Lord.
Not polite, not friendly.
Almost like the narcissistic agent that thinks it knows it all, right? Because you're like,
thank you.
My loan officer can do it. I'm like, okay.
That's actually one of the things that she didn't throw that at me. She threw at me that the seller is actually a loan officer.
Oh, Lord.
The specific program I stated on the pre-approval, the seller has never heard, she has never heard about this program, and neither her seller who happens to be a loan officer.
Oh, God.
Well, okay, then you suck and your loan officer sucks.
Yeah.
Because as an agent, if you don't know what non-QM is.
The hell? That's funny. Oh gosh. Okay, so that was funny. You know,
So that was the start of my deal. And then 2 weeks later, needless to say, I don't want to talk to this woman, okay? Not after that first conversation.
My officer has never heard of a non-QM. Oh my gosh.
I'm sure she was lying, but whatever.
Yeah, that is insane.
But I'm glad I made you laugh. So that was my first convo with Wicked Witch of the West.
This is comical. I mean,
this is comical, yes.
Yeah.
If it were really comical.
Jeez.
So, like I said, you know, I have no desire to speak to this woman, nor do I have to speak with a listing agent for that matter.
Right.
I'm not obligated.
No.
Well, it got to the point where this woman was literally blowing up my phone and my email. I'm on a Zoom with a client, walking them through strategy, and she's incessantly, one after another, dialing my phone. And I keep waving it off, and she keeps redialing me, and I keep waving it, and she keeps redialing me. I counted there was like between 4 and 6 calls just nonstop.
Oh my gosh, that is just way too much now. I mean,
talk about, you know, completely nutso, because I'm dealing with a crazy person here. I'm like, okay, I'm not verbally having conversations. Everything is going to be in writing, right? I mean, it's CYA. You have to.
Yeah,
Everything is CYA to start with. But when you start feeling that you're dealing with crazy, then you have no choice. It has to be in writing.
Big advice, you know, to loan officers. If you're in that situation,
run.
Writing, everything in writing. Think about court, okay?
Yep.
Hearsay will kill you. All in writing.
Actually, I had to go to court for one of my agents as a witness.
No way.
Oh, yeah.
Oh, that's fun. I haven't had to do that one. I've negotiated, you know, things, you know, on to help my agents, you know, communicate. Okay.
Oh no,
I'm not a real estate agent, so I'm not.
I had to go as a witness in small claims, and we can talk about that next.
Oh wow!
But this crazy woman, I'm emailing her to let her know that the buyer is terminating. Yeah. Because now the debt to income ratios are no longer working, so he has no choice but to walk away from the transaction.
Right,
the response, you're going to love this. So is he choosing to walk? Or can he no longer be approved?
Okay.
My inclination was to write back to her a one-liner, lady, learn to read.
Here's my decline letter and just move on.
Exactly.
Yeah, seriously.
Sometimes we deal with the buyer may be okay, the buyer's agent may be okay, everything else may be peachy. But that one absolute a-hole of an agent on the other side will completely drive you batty.
I have an interesting one for you at that. So one of my loan officers reached out to me and says, "Hey, do you have a real estate attorney?" And
that's an interesting story.
When my loan officers reach out to me with, "Do you have a real estate attorney?" I'm like, "Hey, okay, talk to me. What's going on? All right,
more color to the question, please.
Let's dive into this." So, you know, we start conversing on this, and here's the situation. It's not our deal. Client friend of hers calls her and says, "Hey, we went with a broker that has an agreement with our employer, and they're going to give us a lower rate or give us some type of closing cost benefit, whatever it is," right? The loan officer sent out a pre-qualification at a 6.1, but they didn't lock the loan when they were supposed to, and now it's a 6.99, and now we're not willing to take the house at that. So we still qualify, but now they want to keep our earnest. The loan officer didn't even send out the CD until closing day.
So many red flags there.
Yeah, so many red flags. And I'm like, okay, well, the initial inclination, what I told her, I'm like, well, the client might be, SOL, with her earnest money, but let's do a little bit of extra digging. I'm like, a real estate attorney is really not going to help you out at this time, because if there was a cure notice and there's, other things in place, now it becomes a title's, responsibility and their attorneys to make a decision on the earnest money, for this property. However, in the state of Arizona, which is one of the only places that we have in the United States with this, your pre-qualification letter
has an interest rate
on it. And it forms part of the real estate contract.
Correct.
When a listing agent and a buyer's agent come to an agreement on a real estate contract, the pre-qualification is part of it. Real estate agents, friends, if you ever get a pre-qualification with a lower rate, just because a loan officer wants to keep the deal, or something that says market. And honestly, until I learned this, that was me. Okay, so full transparency. I'm not going to pretend like, we never did the mistake. If you write market on there, you're taking away the eligibility from the borrower being able to fight his earnest money if the loan doesn't get locked at that rate.
This, my friends, is absolutely golden. I'm going to add to that. that there are other states that have the same protections effectively.
Really?
Where you actually write in the rate and the payment potentially and the program into the body of the sale agreement.
Wow. Okay.
Georgia, California. I'm not sure about the others, but of the 8 states I'm licensed in,
Okay.
Oregon doesn't, Washington doesn't,
Interesting. Okay.
California does, Arizona does,
Yep.
Florida doesn't, Georgia does.
So extremely valuable.
It is valuable AF because that can save the buyer's ass, i.e. earnest money.
Yep. So now they're in a situation, right? You know, where the buyer's agent has no clue what she's doing, right?
Oh my God. One
Unfortunately, right? You know, we're not using enemies or anything, you know, so she has just simply no clue. You were talking about something that makes you drink. The buyer's pissed off.
And I'm sorry, why is the buyer's agent's broker not involved in all of this?
I have no clue.
Because that's the first call from the BA to
really
the broker.
No clue why they're not. You know, that should be the first phone call. So the buyer is trying to figure out a way, trying to reach out to a real estate agent. You know what she's got to do? Email title. Based on my real estate contract, my pre-qualification stated a 6.1, 25. The loan was locked at a 6.99. The contract terms agreements were those are not met. I can walk. Congratulations.
Hot damn.
A seller can literally just say, what happened? Get sideswiped because somebody was trying to shop for a lower interest rate. How about them apples? And I am so glad I'm not involved in that one.
No kidding.
So glad I'm not involved in that one. But we did consult, with a couple of real estate agents, consulted with a couple of title companies, and they did confirm in the state of Arizona, that's how it works.
And I bet you that's the reason why, like I said, you write in the actual interest rate.
Absolutely.
Page 1 of the Georgia sale agreement.
Mm-hmm.
And same goes for Cali. It lists the freaking interest rate.
It has to be that or lower.
Yep.
Better terms, right?
If it goes higher,
terms.
You're SOL.
Oh my gosh! Imagine being a loan officer on that side. Oh my gosh, those are things that you'll never forget. Thank God I'm not the one drinking on that one, but
I'm digesting that because honestly,
isn't that crazy? All the way down to closing, right? The borrower can just walk away. Another one. So I have a friend.
Guess what? In Oregon, up until this year, the buyer had up until basically closing to walk away with the earnest money protected if the loan didn't come to be.
If they didn't get approved?
Yeah.
Oh my gosh.
So the seller would not be able to claim earnest money.
That is insane. Oh,
there are obviously, I'm generalizing, but to the most part, we did not have
any protection.
A contingency up until the day of closing. This is the first year they've changed to the contingencies for both appraisal and approval.
Honestly, I told you we were going to feed into each other, just kind of go through it. And there's a plethora more that we can talk about. Seriously.
But at the end of the day, I think what's the most important piece, it's not just the stuff that makes us drink.
No.
It's the fact that I think what really irritates us more than anything else and does want to make us drink is the lack of professionalism from other either so-called colleagues or the adjacent, again, professionals with air quotes. And that goes for, of course, not all loan officers are bad. Not all realtors are bad. Not all title and escrow people are bad.
No.
But those bad apples are the ones that do make us go find a bottle.
Yep.
Or drown in a bottle.
Absolutely.
And we just want to make sure that our clients, our real estate agents, our friends are getting the most professional help and advice and not being taken advantage of.
Absolutely. I cannot reinforce that thought and what you just said more. And I really wish, that more people in our industry
held a higher standard of
would become more professional
and
really do care for these moves, because look, everybody that's buying a house right now that is in trouble, or anybody that bought a house that is now in trouble, well, you as loan officers and real estate agents, yeah, you're going to have to put your face to that. And, it might not be your fault, but still, like, it's part of our profession. It's part of our like guidance. And hey, what are the next steps? What do I do if I miss a mortgage payment?
Or an agent who tells you if you don't want to do an inspection when buying a house.
Absolutely.
Who lets you get away with it.
Right. And then what happens? You close on the property. Oh my gosh, we had this, that. We close on the property day of closing. Day of closing. Borrower gets their keys, walks into the house, and there's a leak in their master bedroom. What do we do then?
It's yours. You bought it.
You bought it. But now what happens? Client is calling me and I'm like, hey, you know what? Let's figure this out. Let's see if the insurance was still in place, previously, if it closed, where do we put the claim? What do we do one way or another?
Warranty in place, what's like, who do we go?
Who do we go to, right? Help navigate that. That helped me build experience. By the way, it actually does fall on her because now she took, ownership of the property, even though it was pre-existing. Insurance company can go after the previous one if it was known, but there's a report that shows that there was no problem. But either way, those are the kind of things I really wish that most people become more professional in our industry, just more well-versed. If your goal is just to do, I'm going to go get you your lowest interest rate. I'm going to be really bold on this.
Please do.
You're failing. Truthfully, you're failing because that's not how business works.
No.
The majority of the business owners here in the United States fail within 2 years. And that's because they're always in a race to the bottom. They don't know accounting. They don't know taxes. They don't know how to do that. Don't be that loan officer.
There is Walmart and there is Nordstrom.
Mm-hmm.
If somebody wants the Walmart price,
you get the Walmart experience.
You get the Walmart experience.
Wally World.
I provide the Nordstrom level service.
Yeah, so do I.
And I will not compromise.
Nope.
Not to mention that, but there's also regulations in place to where I can't play the rate game.
Nope.
I can't play the fee game.
Mm-mm.
And therefore, there is a small box that I can wiggle in. But the real question is, do I want to wiggle in that small box? Or do you want me, more importantly, to wiggle in that small box?
Mm-hmm.
Because the expertise you're getting is far more important.
Yep.
The lower rate may be great, but the cost of the rate...
that can be really heavy.
And I'm leaving that hang on purpose.
That can extend the amount of savings that you're doing in cost.
Exactly. And with that, my friend, I would love to have you back.
Absolutely.
This has been a fun convo. Like I said, we could just keep on carrying on for like the rest of the day.
Absolutely.
But it's always great to share professional courtesy, professional...
Yeah, it's fun to collaborate.
Experience, professional outlook. I appreciate it.
Yeah, same here. Thank you very much for having me. And I so look forward, to
Please
doing this
back.
again. Yeah, we'll have a ton of fun.
Absolutely.
Appreciate it.
Awesome.
Thanks.
Thank you.